as a very quick comment before I start on my overall comments, is that it's interesting that if you look at many of these firms, particularly in Europe, I think Sal might comment on the US, but particularly in Europe, actually the environments where you've tried to have commingled environments that have only been institutional players have actually never done that well, because in the end they haven't been able to attract enough liquidity. And so I make that as an observation. I mean, if there were an opportunity to provide that sort of market, we've got the capability to do it, but they haven't succeeded so far. So just to explain to you, I'm Mark Hemsley, I'm the CEO of BATS ChiX Europe. BATS ChiX Europe is the number one, or year to date this year, is the number one exchange in Europe by notional volume traded. And in the 15 odd markets that we trade this month, we're about 25% of the European market. So I always think it's good to come to Brussels and give you a speech as a British guy from London who's going to talk extremely positively about a single European market, because it's the fundamental reason that we have a business, and it's fundamental to our approach. So a bit of differentiation for you. So our vision as BATS ChiX Europe is to create a sort of highly transparent, highly efficient, fair and liquid market, and to create a pan-European capital market. So we are the market that if you want to trade the stocks, the underlying instruments of the stocks, you can trade them. If you want to trade auto stocks across Europe, you can trade them in one place. You don't have to connect to multiple exchanges to do that. So our vision is a vision of a pan-European model. And that's distinct from our competitors, and we're number two in all of the European markets in which we trade, where you've got a regional focus to what they're doing. And so effectively what we're trying to do is allow investors, whether they be retail investors or institutional investors, to invest in all corporates that are listed on our platform. And that's from a single connection. So really what we're trying to do, our overall vision, is that if we can offer a pan-European capital market and connect all of the investors that we actually have in Europe to that market, and also offer that to Asia-Pacific investors or America's investors who look at Europe and find it incredibly complicated in trading venues, CCPs and depositories, but really offer them a single environment that represents a pan-European capital market. That, to my mind, is what we should be doing in Europe, and that, to my mind, is the basis of what MiFID was about. It's how can we offer in Europe a single European capital market. So when you come to raising capital, and when you come to actually providing liquidity in your small, medium or large company, you've got a vibrant market in which to do that, and that's a market which all investors can have access to invest in your company without having to go through lots of expensive exchange connections or multiple broker connections, etc. It's about flattening the European market and creating a single European pool of capital. And I think that's a really clear differential, and ultimately it's not something that our competitors really grasp. The incumbent exchanges had a chance to do that with MiFID 1. Most of them hoped it would go away, and that's where the gap that we went into. And yeah, I think if you're looking at social good, that's where we've got to be going, is at Europe. We've got to be trying to treat this as a single capital market. If you look at what we've been doing to try and support those initiatives, that initiative is that we've actually made a lot of changes in Europe. And if I look back to some of the things Thierry Franck just mentioned, tick sizes, BATS and ChiX as separate entities, and actually since then we were at the forefront of actually trying to get agreement amongst the trading groups, the banks, the exchanges, about actually coming up with a single set of tick sizes, a single set of tick size tables. So if you're into the detail in this and you look at the so-called FESI tables, a lot of that came from the work that we did to actually try and rationalise tick sizes across Europe, because they were so inconsistent. There wasn't a consistent logic underneath those. And so we've actually got to a reasonable point, but I think we've got further to go, and I think some of the work that Thierry implied was going on, I'd be fully supportive of. Again, if we're trying to achieve a single European market, we've got to offer a single approach to things like tick sizes that is actually based in statistical and empirical logic. So it actually reflects the volume being traded, the amount of trading that goes on in instruments. So we're creating an optimal capital market. I think that also goes for other areas where we've led the charge on in Europe. We came up with a standardized symbology, and what that means is you need a consistent way to identify all the securities that trade in Europe. It didn't exist other than going to someone like Bloomberg or going to Reuters and having to pay them to do that. We created a way in which to do that. We put that into a trust, so the intellectual property associated was in trust. It is free to use, the trust is open to anybody to use, and we felt that that was, again, a real social good, that we should be able to identify securities in a consistent manner across Europe, and that's there, anyone can use that, anyone can join that trust, and again, a core piece of infrastructure that we think is needed in Europe. And then one of the other ways in which we've made a significant set of changes in Europe is we've introduced interoperability. Now what that means is if you trade on our market, you can choose any one of 4 CCPs to clear your trades from. And so what that started to do was introduce customer choice in clearing, whereas in many of the situations where you have a silo of an exchange and a clearinghouse, you have no customer choice about that pre-trade and post-trade environment. We introduce customer choice, and what that means for those customers is they're able to do things like improve their operational infrastructure by using just one CCP. They get a much more efficient capital structure, and from our point of view, strategically, what that means is in this world of avoiding things that are too big to fail, if we, in some situations in Europe, if you lost a CCP for some bad financial problem, the exchange would have to stop trading. In our environment, we could lose 1 or 2 CCPs and we could still trade and still facilitate our customers. So it's a big change in Europe. And what we really want to do is enable consolidation in Europe, because if you come back to that original vision of actually a single European capital market, we don't need 20-odd CCPs in Europe. What we need to support is probably 3 or 4 large-scale CCPs that are pan-European, that support a pan-European capital market. So what we're trying to do is really enable that infrastructure, and it's a different vision, but I think the right vision and the vision that underpins MiFID I and what we're trying to do in MiFID II. I think, again, Thierry talked about surveillance, and there was a number of conversations about looking at what's going on in markets. We think we probably have the highest quality surveillance technology in Europe. And one of the reasons that we think we've got that is right from the start, what we tried to do was ensure that we could actually surveil across market. Now, obviously, in our own market, that's the only place that we can see all the names of the parties that are trading. But because we also take the market data from all the other markets, the way surveillance work is that it's about pattern recognition. You have your own algorithms that look for behavior that you don't want and you want to eradicate. And we've had experience where what we are able to do is identify someone and stop them trading on our market. But then we saw, because we're taking all the market data from the other markets as well, we saw the same pattern, and we were able to liaise via the FSA with other regulators to actually stop this on other markets as well. So we've already tried to facilitate the sort of cross-market surveillance that Thierry was talking about. And what we're also just about to release is we've got a whole series of risk management controls, and I don't know whether many of you followed the night situation too closely, but one of the problems was not only being able to shut off your own trading in your own organisation, but what if you've got, if somewhere in your organisation, which you don't know about, information is getting sent to an exchange. What you need to be able to do is remotely shut yourself off on the exchange as well. So we've got those tools, and what we're going to do is make those available to individual trading members or members of our market, so they're able to not only control things at their end, but control all access to the exchange remotely as well. So these are sort of significant moves forwards in the sort of risk control technology that is available in the markets. So I think, looking forward, again, this is going to sound like the Thierry Franck fan club, but I think if there's one thing that I'd put right at the top of the list for you all to support and see put in place in Europe is actually the consolidated tape. It's just absolutely a fundamental piece of infrastructure we need in European markets. And to be clear, what I mean is a pre- and post-trade real-time consolidated tape. So we're not talking about a tape of record that shows transactions 15 minutes after they happen. This is a pre-trade consolidated tape, so you can see the order books, you can see the quotes, and it's in real time, so you can look at the whole market as it happens. So effectively what that should provide is a transparent and inexpensive consolidated tape for all investors, for whether they be retail investors or institutional investors or brokers, but it's for all parts of the financial markets community. And it should also be available free to corporate treasurers and IR professionals in corporates. I think that's part of the equation here, and maybe a counterpoint to what Mike was saying earlier, is that to be able to give corporate treasurers a real-time feed that actually lets them see the order book for their stock, where it's trading, how much is trading in different markets, I think is very important. When I go and see some corporates at blue chips and I say, do you realise that 45% of your stock gets traded on my market? They have no idea. And so I think these are the sort of things that should be a public good, and they should be available free, and they should be available in real time, and they should be available in full depth. The other thing about these consolidated tapes is that they also provide a very strong basis of surveillance on a cross-market basis. So, as I said earlier, we're able to pick up the patterns of a problem, although I couldn't see the firm. So if you can imagine that if we had an infrastructure in Europe that had, whether it's one provider of consolidated tape or multiple providers, I don't really mind, but effectively we could provide that consolidated tape, but for regulators, perhaps provide a special version which had the names of the parties on it. They can actually leverage a piece of financial markets infrastructure for the surveillance of markets, rather than having to take on all the cost of that individually as individual regulators, and implicitly pass on that cost to us, and if that cost is passed on to us, we end up passing it on to yourselves as well. So I think that it's a fundamental piece of regulatory, a fundamental part of the regulatory toolkit in Europe, and should be wholeheartedly supported. So why haven't we got a consolidated tape then? So I'll tell you the two stories you'll hear about why we haven't got it. The first one, we've got problems with standards. Complete rubbish. Reuters, Bloomberg, banks, traders, exchanges have coped with different market data standards for years. And we have ways of standardizing the data. It's not rocket science, it can be done. I would like there to be better standards or a cross-market standard, but it's not a reason we don't have consolidated tapes. The other reason is the OTC trades aren't in the consolidated tape, so it's no point in having it until we have the OTC trades. Again, complete rubbish. We don't really have them now, but we could actually get an awful lot of very useful data to all parts of the financial community and end investors and retail clients if we had just the exchanges and the dark pools providing their data real time. And I think in MiFID 1 it was really the OTC reporting was something that really got away from us in MiFID 1. MiFID 2, one of the things you never hear talked about, but there's an APA regime which is basically a regime for the formal reporting of OTC transactions. It will definitely improve things, 100% support it, and it will feed into a market data infrastructure. But let's not wait the 2 or 3 years for that to be sorted out before we have something as fundamental as a consolidated tape. The reason is you're not going to see a consolidated tape unless we sort it out, is actually the amount of money that's made by the incumbent exchanges out of market data. It's probably their top revenue line now, because we put a lot of pressure on transaction fees, but it's made out of market data. And so what you have is a fundamental problem where actually what we're talking about is markets and market structure, but we have the remnants of a competition and pricing issue that we've actually got to resolve. If we can resolve that and find some way in which the incumbent exchanges feel happy that they can make an income out of a consolidated tape, we'll get one. If we don't solve that, it's going to be blocked by the incumbent exchanges for many a year to come.